Evergrande is in financial trouble and likely going broke, and perhaps you've seen it on the news, but my guess is most of you, like me, had never heard of it before the recent days. Meanwhile, this company sent several markets tumbling, with people predicting it could have led to another GFC like Lehman Brothers did in 2008, which highlights how you could go broke this week because of some company you'd never even heard of that sells property in China even though you don't own property in China. Yet it still has the potential to cause all kinds of financial issues around the globe. If you own crypto, you might have already felt it, stocks as well. A GFC style event obviously creates a domino effect across several markets, so if you own property, it's quite the same as well. If you run a business, your clients might get affected. It might create issues for banks with debt limits, making it harder to access debt or increasing loan rates and so on. If you have a good job, the company could face challenges and be forced to lay off people due to financial problems. All of this because of some company you never knew existed that operates in a country you probably have never been to, and if so, it was only in passing. The Evergrande crisis might not be the end of the world as some have predicted, but it could be, and who is to say that there isn't another company out there about to go broke that can't be saved? And so what does that mean, and what can we learn from this? Well, firstly, it's a strong reminder that outside influences that we're completely unaware of can affect us at any time. This is why you have rainy day funds. It's why you don't over leverage yourself and borrow more than you can comfortably afford to pay back. But on the flip side, events like this present an opportunity. Realistically, the situation is never as good as it seems in the positive times, and it's never as bad as it seems in the negative times. Most markets generally overreact to good or bad news. Whilst for investing in stock market, time and time again, it's been shown that time in the market outperforms trying to time it right and picking the right time in the market, because you can never tell if you're at the bottom or if you're at the top. A lot of these events actually smoke out the plans that don't have solid fundamentals. The stronger investments usually survive and over the long run recover. However, unfortunately not in all cases, as you can be just truly unlucky. However, where possible, you also want to be factoring in that events like this probably will happen at some point. This is also where riskier strategies become more difficult. Take, for example, a home loan. If you put down 20% deposit, then you have a 20% buffer on the price, where if the market takes a big hit and drops 15%, you still have 5% more equity in it. Definitely not ideal, but at least to the bank you have some equity above what the house is now worth. If you put down 3%, this is worrying to the bank because now you essentially have a negative deposit and owe more on the property than it's worth, which means you become higher risk and they are more likely to get involved and to take actions. These type of events and major downturns usually correct themselves within a few months, perhaps within a few years, but if you bought a solid house and put down 20% deposit, in the long run it still might not be ideal, but if you bought the property to keep for 20 years, you'll long forget about this when things eventually recover. In 2020, how many people even knew that the city of Wuhan existed, and yet look at the impact it had on everything around the world. And as we know, in March last year, the global markets were destroyed by it. It's a reminder that we can't take for granted, and we certainly can't expect that markets will just keep going up without corrections along the way. And in most markets, 2020 saw a correction the other way as things recovered. But there are a lot of signs that the global economy is not very stable, and a few wrong moves could cause a massive correction after years of markets growing. At some point, it's going to happen. It may not be today, it might not be caused by Evergrande, but it could be tomorrow, and it could be another company that you've never heard of. The whole idea that a company I've never heard of could cost me money does mess with my mind, but it's just a reminder that we can't predict everything. What do you think about it? Let me know in the comments, and chuck me a like if you enjoyed this, and subscribe for more like it. If you made it this far, you'll enjoy one of these videos too.